we're in a very strong position now, and their leadership is just rapidly going. Everybody that seems to want to be a leader, they end up dead. Their missiles are being wiped out rapidly. Their launchers are being wiped out. They're attacking their neighbors. They're attacking their, in some cases, allies, or not so long ago allies. And, you know, it's really a nation that was out of control.
President Trump making it clear that America is in the driver's seat in Iran as the U.S. military sinks Tehran's warships and tries to keep oil flowing out of the Strait of Hormuz. Welcome back to the second hour of the Big Money Show, everyone. I'm Jackie DeAngelis, along with my phenomenal co-hosts. And joining us for this hour, Barron's Investor Circle newsletter editor, Josh Schaefer. Welcome.
Great to be back.
The president is looking to soften any economic blow from the war in Iran, and the White House is very confident that he can achieve that by keeping energy markets stable. That is why the administration is weakening Iran's navy and offering oil tankers protection, but also saying that the disruption should be temporary.
We have a president who has exuded American energy dominance over the past year, and an administration that is wholeheartedly focused on keeping prices stable as best as we can. Of course, this operation is temporary to protect the homeland. It is the president's belief and his economic team's belief that the economy continues to be very strong, it's robust, and will be able to weather any of the temporary impacts of Operation Epic Fury.
Okay, so I believe the president when he says the operation is going to be temporary, Josh, and he's been very strategic, and so have the Israelis, in what they've done so far. But I think what's got the markets kind of falling out of bed a little bit today and oil spiking once again is it's good on one side, it's bad on the other. It's this idea that we're wearing Iran down and that its arsenal is dwindling and that it's slowed down its ammunition to prolong the duration of this, which is the concern. What are your thoughts?
Yeah, I mean, I think that's why you got the little bit of spike in oil today, but I don't want to overreact too much to today's move. I think we can zoom out and look at the last 3 days move that we've seen in oil, and you really saw that move sort of calm down yesterday, right? And so I think the market has sort of believed that this is going to be temporary and it's going to be quick. I mean, yes, you've seen a large spike in oil, and you had this long period where oil was very cheap on a relative basis, and then you get used to it to some extent, and I think people start to see, oh, $80 a barrel on Brent, oh no. It was 120 a couple years ago, right?
Right.
So,
well, it went up all the way up to 125
Yeah.
during the Russia-Ukraine conflict when it was in its early stages and all that uncertainty was there. So we're a long way off that. And the Brent price, while it is a global factor, doesn't set our price at the pump. But, Brian, I'm not discounting what people feel. They had just started to feel the impact of lower gas prices, and then they're going to watch them tick up again.
Do you have an oh-no level on oil? Like 80's not your oh-no level.
Oh, no.
Oh, no, I was like, what?
To go with
Said, you know, like 80, oh no, but that's not your oh no level. But I'm just curious if you have an oh no level, like on West Texas, where you'd say, we hit this, oh no, that could mean something worse.
Yeah, so what I would be looking at, Brian, is actually year-over-year rate of change. So Morgan Stanley's Mike Wilson was pointing this out, and I thought it was a great chart. So it's looking at year-over-year change for WTI crude. And essentially what happens is every single time the WTI crude goes up 75% to 100%, again, year-over-year compared to the same price last year, we would enter a recession. So that's when you're starting to get it actually have economic consequences. That gets closer to like $100 a barrel. Okay. So we're still pretty far away from that, right? If we're looking at WTI, I think it's at about 75, right? So you're still pretty far away from that kind of move where you're talking broad economic consequences. I mean, I just use the term recession, right? So that's very bad. I think right now, it's something that the market can sort of handle and swallow, which it really sort of has.
And just spitballing it, I was going to say that 100 was my oh no level. I know that's a technical
It's a nice
term.
round number.
But Taylor, consumers, especially we talk about a K-shaped economy, if you believe that there is a K-shaped economy and certain, you know, of the top level are not going to really feel a 30-cent rise in gas prices, but others at the bottom of the K are going to feel that. How does that play in short term? Because even with the shutdown, for example, the government shutdown, we saw an impact of that. People weren't getting paid, and then it came through, it bled into the numbers.
Yeah, and that's when I think someone said fourth quarter GDP was like 1.4%. And I looked at you and I was like, oh gosh, that feels low. And you were like, yes, that includes the government shutdown, right? It wasn't that 3%, which is what Atlanta Fed GDP has us at for the first quarter, the excitement of above trend 2% growth. And I think, Jackie, for me, this is where it gets tricky because you feel for the consumer. If we talked about statistic that I pulled yesterday. Every $10 increase in the price per barrel is that 30 cents per gallon extra. Over a long period of time, if you're filling up your gas tank once or twice a week, that really starts to hit into your disposable income. And then how much does that crowd out all of the other spending that you wanted to do? That hurts the consumer, but I have to say, from a corporation standpoint, from an equity market standpoint, from a profit standpoint on companies, productivity, I hate to say it, might save the day again. So we got productivity numbers out again this morning. Non-farm business sector labor productivity is up 2.8% at an annualized rate, following an upwardly revised 5.2% surge in the third quarter. That is well above trend. At the current business cycle, we think that started at the end of 2019 was about 2.2%. Before that, the numbers are like 1.7. You have to go back like since 1947, all those averages are well low. So you have productivity that is keeping labor costs low, that are going to, in my opinion, allow companies to navigate some of this volatility. Now, that doesn't help the consumer who's just looking at money coming in and higher expenses going out if you're at the gas tank. But so far in prices paid, we talked about in the services sector are down. We've talked about some of the other trade numbers we got this morning that show prices paid were down. So those are backwards looking, but that is good news for the consumer.
Dagan, you can talk about anything you want, but something I thought was interesting, and you might find interesting also, is how the Democrats are reacting to this. While the president's saying that it's temporary, and certainly under Joe Biden's tenure, we've seen worse with gas prices. If their operation does stick to the timeline that he outlined, it would be temporary. We would weather the storm. But the Democrats are chastising the president for not refilling the SPR that Joe Biden drew down as to bring gas prices down a couple of cents. That's the direction they want to go.
There are not enough curse words in my great lexicon of curse words that I have spent my almost 6 decades on this earth building to use against the Democrats. Talking about the President of the United States, Donald Trump, not filling the Strategic Petroleum Reserve. Joe Biden drained it, 180 million barrels. Drained it. It was half full for political reasons when it is there for a supply shock. What did they say about Biden draining the SPR? Absolutely nothing. Currently, it's 60%.
And that was just
capacity.
to artificially bring gas prices down.
For
there was no emergency
for political reasons, which it actually doesn't really help do that.
Right.
It helps meet demand needs when there's not enough supply. Here's a headline in the Washington Post. This is hella journalism you got there, WAPO. Trump's Iran conflict cuts the world off from a crucial energy source. So Trump is hurting the rest of the world. Trump is freeing the rest of the world. Right. And is laying the foundation for great prosperity and safety for the rest of the world. They should just be like, we're in the bag with China, and we're worried about the commies and the Iranian regime that has murdered Americans since the late 70s. And then they go on to write about liquefied natural gas coming out of Qatar. Joe Biden signed a ban on permitting new liquefied natural gas terminals down in the Gulf. Didn't really know he was doing it. That was an issue with Speaker Mike Johnson. He was like, I didn't know that. Well, he did it. So where would we be right now if that had actually happened? Instead, because we have an energy first, America first president, we have the cheapest natural gas in the world. We cover all our domestic demand for natural gas with our own production, and we produce even more to export it. We are, as Tom Close has said on our show, the privileged continent. We have cheap crude oil. world-class refining. And the only thing right now, and do worry about other nations because they need energy. However, the only thing I would worry about, and it goes back to Taylor's point about productivity, the higher prices, we're not in store, as much as we hate higher gasoline prices, in inflation shock from this.
Right.
This, however long it lasts, it will cause a slowdown in growth because of it's actually disinflationary because of the job environment right now, because of AI, because of productivity gains. So it's not going to be, none of this is ever great. But we were worried about like sub $60 a barrel oil last year that our fracturing companies and our crude suppliers weren't going to be producing enough.
Just before we came on the show, Brian, and we only have a minute left,
Yep.
Danny Danon was speaking. He's the Israeli politician. He's also their ambassador to the United Nations. And he was talking about the threat that Iran did pose before this, that the assessment the president was making. If you heard Steve Witkoff on earlier in the week, I believe it was on Hannity, he was talking about them directly coming to the meetings and saying what their capabilities were. They were laying it out there for everybody. Why do you think this has been such a hard sell?
You know, has it been a hard sell? Do you know what I mean? Like, I understand we've got the polls, and I was kind of 50-50 the last time I saw the polls about Iran. But, I mean, honestly, for the reasonable American out there, is Iran a particularly hard sell? Democrats have wanted to say, well, there was no imminent threat. And it's like saying, you know, for 47 years, I lived next to somebody who every day walked out in his yard and said, I'd like to kill you today. Just wait till I have the opportunity to do it. And eventually you call the police 47 years later and say, you know what, can we get this guy out of here? He's a threat. Like it took a long time, but it's reasonable, okay? So I don't think for the average American going after Iran is the hard sell. I think the hard sell is, what do you want to finally get done there and how long are we going to be there? Like the success thing, I get it at the level of, you know, get rid of the Navy ballistic missiles drones, okay? But I think there's that bigger question of, will it be successful if you do all those things, but Khamenei's second oldest son is in power?
Right.
That's the part that I think is hard to solve, and that's unsolved.
I
right
agree
now.
with you. We don't have enough time to discuss it, but then you had headlines of the president saying that he wanted to have some sort of a role in picking who comes
I
next.
saw that.
And so that's if you give a mouse a cookie, it's like, or, you know, does it take it one step further and one step further?
Do you know what
How
I would
far
say if I were
will it
him?
go?
If I were him, though, I would say yes, I want a role.
Yeah.
Because I don't want the guy in there who hates me just as much as the guy who left. You know, so I get why he said
But you
that.
would hope organically that wouldn't happen as a result of the operation. But I hear you, it's not.
There's hope and there's hope, you
Right.
know? Yeah.
Okay.